Taking a look at futures this morning, as you can see, we've got some red arrows, a little bit of an escalation in selling as we move into this data dump we're going to get in about 5 minutes from now. Let's take a look at yields right now. We're going to get the Fed's preferred inflation read, April PCE index out. That's coming up at 8:30. Economists expect a monthly rise of 0.5%, 3.8% year over year. Also, we get the second read of first quarter GDP. Economists expecting 2% growth. I want to bring in Market Rebellion co-founder Pete Najarian. Pete, so what are your expectations in particular for April PCE? Inflation has been the sensitive topic. You've got Kevin Warsh now in place at the Federal Reserve. What are your expectations here?
Yeah, you know what? I would expect them to be as high as people are thinking they will be. And the reason I say that is obviously when we look at inflation, we talk about crude oil all the time and the influence crude oil actually has. And WTI, it was a few weeks ago, we were still at 112. Then just a week or so ago, we were at about 108. And then we did this nice big move to the downside as we've talked about some of the progress that we're making with Iran. So we're still a long ways from that 67 level, you know, back a month or two ago. But I don't think that's something that's without getting some sort of reach to those levels. But for right now, obviously, this is inflation. I mean, this is if you're wondering about, you know, where's the biggest piece of inflation, it certainly is crude oil. And that's something I think that until we get this settled with Iran, it's going to stay relatively elevated. But we have improved dramatically over the last couple of weeks.
Now, Mark Tepper, we're going to get that first read on GDP. We're expecting 2%. You've got jobless numbers coming out, claims. Yep. That is something that the market's been watching, that the Fed has been watching. I mean, all of these numbers, even durable goods, all of this paints a picture of an economy that may or may not be withstanding the conflict with Iran. Yeah,
but you also look at the Atlanta Fed GDP Now estimate, which has second quarter GDP estimated at over 4.2%, right? So there's certainly some conflicting data out there. I think the biggest thing to watch for is, and we're not going to get it today, but real wage growth. Our households experiencing wage growth that is outpacing whatever the rate of inflation is. When that is the case, affordability is improving. Now, Pete, a question for you. Good to see you. Obviously, WTI oil, that's the number one thing impacting inflation right now. But it also looks like money supply has increased substantially as well. I mean, you're talking about a bunch of tax refunds, roughly $150 billion. You've got tariff refunds coming as well. And then you've got lower withholdings in paychecks this year. So you look at all that stuff, that's stimulative. Could that actually keep inflation higher than we're targeting for longer than expected and beyond whenever we can get oil prices back down to where they need to be?
It certainly could. And Mark, I think you're dead on that. I think that's a very strong possibility. I think the thing that I'm so encouraged about, and when we talk about GDP and we look at some of these various stats that we get and some of the numbers that we get, I got to tell you something. The biggest numbers to me are what are they doing from an earnings perspective? And when we look at this earnings season that we're basically getting towards the latter part of it, how many are they crushing? Basically 80%, give or take, beating earnings, beating revenue, beating across the board. And yet, you know, we hear these polls that tell us about all the negative things. So I'd rather take a look at what those numbers look like from the earnings perspective, and you know, in terms of what we're looking at with GDP and so forth. But I think you're dead on that. Absolutely.
Mark mentioned oil. Let's pull up all the oil contracts right now because, you know, we've seen, I don't want to say volatility, a little bit of volatility, basically. We did see prices jump overnight after the U.S. struck an Iranian military site. They intercepted multiple drones after Iran sent drones from a nearby control station. You know, Pete, White House Economic Council Director Kevin Hassett told Maria that prices are going to drop sharply when this conflict ends. What do you say?
I absolutely would agree with him. I think we've already come down significantly, like we were talking about. WTI was up there at 118 or something like that, and here we are now. Yesterday we were in the upper 80s for a moment or two, then we pop back up over 90. But I think that once we do get this settled, yes. Are we going all the way to 67 immediately? No, I don't think we're going to do that. But I do think that if we drop into the lower 80s and then all of a sudden we get somewhere into the mid to upper 70s, that is going to make an absolutely incredible, amount of worth, I think, in terms of what people are looking for. I don't think it'll take all that long to get all the way back to the upper 60s. but it will take some time. But upper 70s, I don't think that'll take too long at all.
Yeah, so Pete, quick question for you here. As it relates to trade, you've been talking about, you called it the back to the future trade. Tell me a little bit more about that.
Well, you know what? How many people remember that Nokia used to be one of the biggest and baddest out there, right? Before Apple came out and basically took their place. Well, Nokia is absolutely on this unbelievable run. They've got a $1 billion partnership that they executed with NVIDIA. So I think that one, you know, it's up 142% year to date. That's not such a bad run, right? I mean, for the upside. And I don't hear hardly anybody talking about that one. How about BlackBerry? Remember BlackBerry? That was another one of these in the past. And take a look at what that's done. It's up 53% over the last month.
Let me jump in with some of this data, because the market certainly is having not a large reaction, but a better reaction. We're coming back off of those losses on key futures. Let's start with what we saw with GDP for the first quarter. We're coming in with a read of 1.6%. So this is a revision down for first quarter GDP. The first read was 2%. Now we're coming down with the second read of 1.6%. And that is actually below the range of 1.7 to 2.2. Now, more importantly, what the market might be focused on right now is the April PCE price index. So better than expected month to month. That's the inflation story. We saw a jump of 0.4%, 3.8% year over year. That's in line. Core month over month, a little bit better than expected on the inflation story, 0.2%. And then inline core year over year, 3.3%. Take a look at this one. Durable goods for April, guys, 7.9%. The estimate was 3.5%. That's something to talk about, Pete. I heard you. Ex-transports, 1.1% on durable goods. The expectation was only 0.5. And then we also got core cap goods, minus 1.1% on core cap. A lot of that going in, 215,000 on initial jobless claims. Maybe not a big story there. Income also, real quick, Mark, I want to get your take on this.
This one's important.
Yeah, so April income came in flat. We were looking for a gain of 0.4%.
But spending was up 0.5% month over month.
What do you make of that?
So, I mean, when income is flat and you are spending more money, that's the impact of inflation. That's, you know, an extra $100 per vehicle at the gas pump. Like that is hopefully we solve that problem very quickly. But the longer that drags on, the bigger a problem it sets up for the economy. Now, to Pete's earlier point, though, and I'd love to have him chime in on this one again, but the economy right now, you know, normally it's really fueled by the consumer, but the economy right now, it's estimated at 4.26% or something like that for Q2. That's because of AI capex, right? That is what is continuing to fuel the economy. Pete, last words to you.
Yeah, there's no doubt that is fueling the economy, and it shows the strength across the board, and it's amazing. So many people were saying, hey, you know what, it's a bubble, it's already gone, and let's forget about that. Well, they've been dead wrong on that side of it. And it's been something that continues to be very, very a big part of the economy, obviously, because of the dollars that we're talking about. And you see these things, and you just literally, it's mind-blowing. But the reality is that's where we are. And even stocks like, you know, I'll give you one last stock. How about Caterpillar? That's my AI stock for you guys, just because what they do, what they've been doing, and the power generation and everything else that they've got. Take a look at that stock. Take a look at what Caterpillar's done over the last 6 months, the last year. It's an incredible run to the upside, and nobody knows about that one as an AI stock. Well, it absolutely is.
Oh, absolutely. No, it's an ancillary play on the AI build-outs and the data center build-outs, 1,000%. Pete Najarian, great to have you as always. Thanks for being here with us.
Thanks.
All right, we'll be right back, everybody.
Appreciate it, Cheryl.
All right, we'll see you soon.